Hello guys, welcome to my channel Aladdin FX, and today I'm going to take you through a profitable strategy called Fibonacci retracement strategy. This strategy is very effective and have a high winning rate. First, we need some tools set up on the MT4, and then we look at buy entry as well as a sell entry. So we need this strategy works very well in a well trending market. It struggles in a bullish in a ranging market. So we need a trending market to apply this strategy, Fibonacci. So first we need our Fibonacci tool on our MT4 and then a stochastic chart at the default setting, that is 533 period. So for our buy entry requirement, we need the market to swing a strong upward trend for a buy entry, and then we need the market to retrace to a particular key levels, what we call sweet spots. These key levels are between the 38.2 and 61.8 Fibonacci retracement. And then if you are looking for a buy setup, our stochastic chart should display overbought on our stochastic chart. Let's look at this bullish example on this chart. Here we have our price swing from here, this point up to this point. As you can see on my screen on the chart here, we have a strong bullish trend from this angle to this angle, and price got exhausted and then it started pulling back. When price start pulling back, that is where we start watching with key interest. Now, because we are looking for a buy setup or a bullish setup, we wait for the price to retrace between what we call our sweet spot, which I called area, between 61.8 and 38.2 Fibonacci retracement. Looking on our chart, price pull back at 61.8, which is one of our confirmation that we look for, one of the signals telling us price is getting ready to be bought. And then we look at our stochastic chart. Is price oversold? Yes. Looking at our stochastic chart, you can see the price is oversold here. And then the third confirmation that we need is a bullish signal, a bullish candle. So looking at the arrow, this candle is our bullish candle as a confirmation, a bullish engulfing candle as a confirmation, and then we are set for an entry. So we put our entry at the close of this candle. We put our nice entry here, and our stop loss should be 3 pips below our entry point. 3 to 5 pips below our entry point should be our stop loss, and then we leave the market to judge. Now we allow the trade to run, to rally, and then rally to our the previous resistance, which is 0.0 on the Fibonacci retracement tool. Then we exit our first profit or our first trade. In this particular strategy, we open 2 to 3 positions on this trade. So when the first TP is hit at 0.0 on the Fibonacci or at the previous resistance level, we exit our first trade, and then we allow our second trade to run to 127.2 Fibonacci, and at that point you can choose to close your trade, or you can also allow your trade to hit the third TP, which is 161.8. So Three things should be observed here. We need a price swing if you are going for a bullish market, and then we wait for price to retrace to our sweet spot, which is between 61.8 and then 38.2 Fibonacci retracement. And the next signal that we look for is our bullish candle, because we are going for a buy. And then we set our stop loss 3 to 5 pips below our entry point. We exit our first trade when the price hits the previous resistance level, which is 0.0 on the Fibonacci expansion tool. And then our second take profit, we allow the second trade to run to 127.2 expansion, Fibonacci expansion, and our third trade to 161.8. Guys, the main purpose of Fibonacci retracement and expansion, the retracement is used for an entry point, and the extension is used for a TP or take profit. So the main functions of Fibonacci strategy. Now let's look at a sell setup. Guys, if you want to write the buy entry requirement, you can go ahead and let me wait for some few minutes for those who want to write the setup to write. Buy entry requirement 1, we need a price to swing. If you are looking for a bull market, swing high up, and then we wait for a price to retrace within our sweet spot, which is 61.8, between 61.8 and 38.2 Fibonacci retracement. And then we have our stoch chart as an indicator, which should show an oversold if you are going for a buy setup. And then we wait for another confirmation, that is a bullish candle or a bullish engulf candle, and then we can enter our trade and put our stop loss 3 to 5 pips away from our entry here. 3 to 5 pips away from our entry. The same setup, let's look at a bearish setup, a similar setup. On our bearish chart here, we look for a strong swing down or a strong trend downwards direction, and then we wait for price to retrace between our sweet spot, which is the 61.8 and then 38.2. Between these key levels, that becomes our watch point. So we wait for our confirmation, a bearish confirmation candle like you see on our screen here, and then you put our stop loss 3 to 5 pips away from our entry here. Please don't open a position without a stop loss, because anything can happen in the market. There could be a spike from a news and then it could take you out. So it's advisable to open a trade and then put a stop loss to minimize risk. And then the same thing can be said, we allow the trade to run to hit our previous low or the previous support, which is 0.0 on our Fibonacci retracement, on our Fibonacci expansion, and then the second TP at 127.1, and then the third TP at 161.8. So it's very simple, it's not hard. Let's look at our live chart here. This is a live chart for EU or Euro USD. Let me increase. Yes, let me zoom in so that you can see it. This is our Fibonacci tool here, and then we have a price swing from this level, which is a resistance level, and then price form a new low on the chart here. So we have a nice downtrend up to this level, and then so on the Friday, market pull back a little bit, and then market close. Now we are looking for the market to open at 10 p.m. today. Today is Sunday. And then so what I'll be looking for, using the same strategy that I show you on the page, we wait for the price to move into our sweet spot. Let me zoom in again so that you can see it clearly. Our sweet spot is between 38.2 and 61.8. This area is our sweet spot, and then it should conform with our market structure, which is the previous support. So you can see the red line here. I put a red line here. That is my entry point when the market pull back to this area. So when market pull back to this area, which I call the sweet spot, I'll wait for, because this is a bearish setup, I'll wait for a bear candle, a bearish candle for confirmation, for price confirmation, and then I'll swing this. Our first TP will be 0.00 on the Fibonacci extension, and then my second TP will be 127.2, and then I'll allow the third trade to run to 161.8, and I'll be down for this trade. So guys, this is a live chart. Today is Sunday. You can apply this when the market opens using the Fibonacci tool that I'm talking about. I'm using the auto Fibonacci, so you can get Fibonacci at a default setup on the tools on the MT4 platform. You apply it nicely, and then you apply the strategies that I showed you on the screen. So for a sell setup, those of you who want to write the sell entry setup or the requirements, you can go ahead and write it down. It's on our screen here. This is our sell entry setup. Nicely here. If you are not comfortable, you have to practice it on a demo account. You practice it until you become comfortable with the strategy, and then you can apply it on a live account. Guys, this strategy works. It's very profitable. It's high striking rates. You can make a lot of pips from the market using this Fibonacci strategy. So that'll be all for today, and then I'll be looking forward to seeing you in our next video. Thank you guys. Have a good day.